Hi and good evening traders. We are on the 20th of September 2021, 8:27 p.m. Indian Standard Time, and a pretty sharp sell-off in terms of points, 216 points from the Nifty Futures. This is the Nifty Future daily chart. It was a gap down followed by an intraday bounce back, which did lead to a little bit of hope of the fact that index has enough strength. In fact, it went positive for some time, and then towards the later half of the day completely gave away. The intraday movement we can see from this 75-minute time frame. This was the opening bar, a bounce back to get some faith back, and then complete giveaway. Now, in our last analysis, we had drawn this congestion, we had marked these levels, expecting them to act as the short-term support. Now, what do I mean by this is that corrections are at times one-legged or multiple-legged. So are we going to see this as an extension, like for example a fall, then maybe a bounce back, and do we get another fall? Are we going to see something like this? I don't know, but it is important to understand that what can we anticipate. Okay, so before that, let me get rid of this. Yes, and I think there's one small one. So if we get a bounce back, now the good thing about this level is we've got a pretty nice point of control from the volume profile from this leg all the way up and from this leg all the way up. Got a pretty decent volume profile at this juncture, which means that this is indeed the short-term support for the Nifty. If this turns out to be a one-legged correction, then we should see these levels to hold. These levels are close to 17,300 on the downside. Last time it went as low as 17,260, 65. So let's say 17,200 and 300. Let's give it a 100-point range as a support. So 17,200, 17,300 is what we can expect from a short-term point of view, and we can expect a bounce. Now, when we get the bounce, of course we will get the bounce, there's no doubt about it. When we get the bounce, is the bounce strong enough for a new high, or the bounce is just one more bounce, short-term bounce, which will lead to the follow-through sell-off? That is need to be seen. That we cannot predict, that we should not also get into that. All depends on how we get the bounce, from where we get the bounce. The quality of the bounce will matter. If the quality, if the nature, if the size of the bounce is not good enough, then yes, the possibility of a two-legged correction is definitely there. In such a case, the next level of a little bit of supports can be seen at the psychological 17K mark, which is down here. But the next level, which seems to be a little more meaningful, which also has pretty decent volumes kicking in, is the highs of around 16,700. I don't mean to figure out or predict the target of 16,700 right now. These targets will open up only once the lows are broken. But overall, we've had a sell-off, and I was looking at the charts and I was commenting that there are no negativity per se on the charts, but prices don't need a technical reason to correct. They don't need any kind of reasons to go up or come down per se. The Bank Nifty is a classical evening star on the daily time frame. It's in a rising channel, beautiful. This was the pennant kind of a pattern which gave us a breakout. This is the short-term support, the 37,000 psychological level. It's a slightly better off placed right now compared to the Nifty. Interesting to see whether the psychological level of 37,000 holds or not, and if it doesn't, then next we can look at is 36,500, etc. But the private sector ones like iBank, HDFC, Axis, Kotak, etc. are the ones that should lead if Bank Nifty finds support. We have seen recently what PSU did, and yes, they are very good to give away their gains very easily, and that's exactly what the stocks have done. FMCG was the loner That's the only sectoral gainer in today's trade. And yes, we would have cursed ITC for months at a stretch, but ITC and Hindustan Unilever were the only two stocks which were trying to support the index well enough throughout the session, and you can add HCL Tech to that list as well. Metals got heavily beaten down, and I would strongly suggest to stay away from the metals till we find any kind of selling ease off. If you take a look at the CNX metal index, a big gap down and a big sell off, double topish kind of a behavior. Now this kind of a chart, this kind of a fall requires us to move to a slightly higher time frame. Try and analyze the weekly time frame of CNX metal and figure out what are the levels. The 5,000 level, of course, is a psychological support for the index, and try and figure out that what can be the extent of the fall. But nevertheless, if you are predominantly a long trader, then I would suggest that metals is something that you should try and stay away from. From a bullish perspective, if you take a look at any of the equity markets, and if you take a look at Nifty, we had a wonderful rally. We had a wonderful rally from the April lows. There was a multi-month consolidation here, a little bit of shallow consolidations here and here, but overall the sentiment stayed bullish, and there was not much of any meaningful correction. There was a consolidation, but not a meaningful correction in the tune of 5, 8 or 10%. Are we heading towards something like that now? That we'll get to probably get some clarity at the end of this week. But from the long perspective, I think the bulls, us who essentially go primarily long and try to make returns, I think this is a time to wait out a little bit, not be aggressive. This is the time that we wait out patiently for the supports to kick in, if at all. And do your homework, prepare yourself that if we get the next leg up, when we get the next leg up, which are the sectors, which are the stocks that are likely to lead. So this is the time, I think, where the preparation needs a priority compared to aggressive trading. All these whiles, if you've been following my videos, I've been talking about the Dow Jones, the US markets have moved into a downtrend. And I've been talking about the volatility which has kicked in, and the dead cat bounce, etc. All those that have been following for the last few days. As I record this video, 8:35 p.m. Indian Standard Time, the Dow Jones is down close to 500 points. It's a gap down. This is not good news. It's coming close to this lows of 33,900, and the further lows is close to 33,200. So this is not a pretty picture. And the SGX Nifty right now is up 70 points, 69, 70 points, consolidating the fall. But yes, the cues for the correction seems to be global in nature as of now. So overall, it makes sense to just wait out a little bit, see what's in store, wait for the sell-off to ease off, and then start shopping again. All right. Till then, take care of your trades, and please maintain stop losses and prioritize risk management. Thank you. Trade well. Trade well.